Hi there, November 19th. Another important update. I'm going to talk about Bill Gross. I finally am settled down for a few hours, or a few days actually. It's been like 24 hours since I've been settled down here. Lots going on, and I might be going back to California in a week or so. But for right now, I'm here in Utah, and Bill Gross was on Bloomberg today. And I want to talk about Bill Gross. You financial folks will know that, or you may know, he manages the biggest bond fund in the world, PIMCO. And so I really want to watch Bill Gross, so I made it a point to be here and watch him on Bloomberg today. And bottom line, Bill Gross generally is a pretty cheerful guy, but when I was watching him today, he didn't look too happy. And what did he start talking about? He started talking about China. He even talked about an asset bubble of China. And so I understand that I've got varied audiences. I've got people that are, in New York, people all over the world that have different interests and understanding about the financial markets, but it is tied together, and I attempt and endeavor to speak in a holistic manner. So this will be finance stuff which will affect all of us, so I might switch around between financial terms and other things. But once again, my trip to LA was a good thing, and we were talking about China there with Mike, and Bill Gross mentions China, and he talks about a potential bubble in China. He mentioned, and it's important for everybody to know, that China's also was suffering during this worldwide economic financial crisis, supposedly a year ago, and they threw $1 trillion to stimulate their economy, and so far it looks like it's working. But I could tell Bill Gross, he started talking about it, and it makes sense that China, the economic miracle of China, has to do heavily with producing at very low prices and selling to the United States of America. Well, the United States is not rocking and rolling. And I know there's been all this talk, and there's even been less. I noticed, there's indicators that people think that, hey, it's over, it's been fixed. But lately, Timmy's talking about it not being that great. Even Obama was starting to warn about things. I noticed an article on CNN. Let me see if I can click on it. Well, it talks about the interest on the debt being, I think it was 4.8 trillion in 2015 or whatever. 4.8 trillion interest on U.S. debt will be happening. Just I guess in 2015. Of course, I'm more bearish than the official forecast, but the important thing about Bill Gross today, Bill Gross, everybody should know that. I hope all Man of Truth people understand it, but I'll explain to you now. Bill Gross manages bond funds, which are where conservative investors and governments, including the government of China, put billions and billions, and it adds up to more than $1 trillion, or trillions of dollars lent to the United States of America to finance our deficit, the people of the United States and our country, our deficit. Well, that continues on. It's happened at very low rates, and Bill Gross mentioned that. And he also said that the Federal Reserve can't afford to raise rates right now, which, they're trying to fix the economy with these artificially low rates. So here's what's going to happen. Once again, future's visible, so I'll tell it to you now. And it would be great to hook up with some bond fund guy, because, right now the 30-year bond, I guess the yield has gone down a little bit the last few days, but the yield's going to escalate tremendously as more and more people say, I cannot hold U.S. debt because of the tremendous printing of dollars and the hyperinflation that looms at some point in the near future. So what's going to happen, the Federal Reserve, even if they don't raise rates, I think the time will come when there'll be a Volcker-style thing, and so that's why it's interesting to me that Paul Volcker, the Federal Reserve Chairman back in the 80s, why Paul Volcker, it's interesting that he's involved with the administration now, because he really raised rates to supposedly stop inflation, which it did then, but it won't this time. So even if the Fed does not raise interest rates, the international community and those wealthy individuals and countries that lend money to the United States will demand increasingly higher rates. So we're going to have the worst of both worlds. We'll have inflation and hyperinflation, and we'll also have rising interest rates no matter what the Fed does. But I think at some point the Fed will say, look, we have to borrow money, so they're going to start raising rates, and then you're going to see rates go up like I did when I was in college, when the prime rate was 21.5%, people were getting 21% on their money market rates, and people looked stupid for putting money in the bank at 5.25%, 5.25% back there in the early 80s. I think we're going to see a repeat of that scenario. So watch out for higher interest rates. Bill Gross, everybody should know when he's on, I would watch him. He is one of the big boys. In fact, he's the biggest boy in managing a lot of money. And he didn't look too happy today. Latest news from MOT in Utah. Ciao.